Friday. Good morning, traders. This is Blake Morrow, and you're listening to the FACE webinar. We haven't heard from Dale this morning, which tells me that he probably, which he doesn't do often, but he probably slept in. So he, and we decided, well, you know what, we're just going to let him sleep this morning. So I'm sure he'll pop in about an hour from now and go, oh my God, I can't believe I just fell asleep and I slept through this. And it's not a big deal to us. We just had a time change here in the US, although it shouldn't have affected him in particular. He has been known from time to time to sleep in. So therefore, I'm going to take the helm this morning and pass it over to Steve in about 30 minutes. So anyway, and like I said, there was a time change today or yesterday actually, and it is exceptionally early here, at least for me. This is the time of the year I cringe a little bit as I'm getting up with the West Coast people. So at the same time it is for me here at 5 o'clock in the morning. It is 5 o'clock in the morning in, let's say like Los Angeles or San Francisco or somewhere. So I'm on West Coast time. So it's little bit different for me personally, where my days get a lot longer, and in Arizona we tend to get a little bit hotter too this time of year. So this is when things start to heat up. So anyway, what I thought I'd do this morning is go through all of the majors and take some of your questions before Steve comes in, and we'll just go through the charts and Steve, stop it. I'll talk about that later. All right. Okay. So anyway, let's talk about what's important right now, and let's talk about the markets, okay, and what's moving, which actually, believe it or not, isn't a whole lot. The market's actually kind of quiet right now. I'm kind of establishing a couple positions right now in the market, and I'll talk about those as we go through the majors. But let's start with the euro dollar. So, and by the way, if you have not watched the week ahead video, make sure you guys do that. If you don't know where to do it, here, let me grab it for you. Give me 1 second. Okay, here's the week ahead video, and this is the one that we did over the weekend. We don't have to watch the whole thing, but what I'd like you guys to do, and let me grab the link here. I'll put the link in the message in the chat box. Okay. So make sure you come over here, subscribe to the ForexAnalytix site. So this way, and allow YouTube to give you push notifications. So and it's great. I'm going to stop for a second and just tell you guys, I really enjoy YouTube, and I enjoy it because I have I have kids, and my kids, believe it or not, they don't even watch regular TV anymore. They watch YouTube, and I've kind of adopted a lot of that myself. I tend to watch a lot of YouTube shows, not necessarily shows, but like updates on whether it's ForexAnalytix or things about whatever my interests are. So I end up using YouTube quite a bit, but following like the videos, like the ForexAnalytix videos, if you do that and we post a new video, you can get an update and you can get a push notification on your desktop or whatever. It's kind of nice. So make sure you guys watch the week ahead video, and I'll talk about like some of the analysis that's that I discussed over the weekend. All right, so hold on really quick. Oh, it looks like Dale is awake. He, hold on really quick. Looks like he's coming in here. Hold on. Let's talk about the euro dollar. Okay, so here's the euro, and the euro's under a little bit of pressure right now, but the euro dollar has been in a very tight trading range overnight. You know, so you can kind of see how we haven't really done a whole lot, and it's very messy as far as I'm concerned. Very messy price action, and right at this moment in time, I would wait. Hold on, really quick. Right at this moment in time. Sorry, I'm just kind of trying to communicate with the rest of the team. We're just kind of you know, a little sideways, and the euro dollar should probably find some support once again at the 618 retracement. So the 122.66 level, or you know, if you're you know, you're using ForexAnalytix, you can see the first support here at 122.65. And by the way, that's important if you use ForexAnalytix, because like myself or the rest of the team will come through and we'll adjust the support and resistance levels for you guys. And we try to do it at least once a day, and sometimes we might, if things get really active, we might do it a couple of times a day. But it's nice because when those support or resistance level triggers go off, it sends you a push notification, also an alert on your phone, and that's and like I said, those are always adjusted, and this way you can get notified when they're tripped. So like in the euro dollar, for the case, if we start breaking through this 618 retracement, you're going to be notified, and I think that's going to be pretty key support for today. Now, any type of rally in the euro dollar going back up to 124 is probably going to find some sellers, and you know, anywhere through here. Let me draw this out for you, like right through here. You know, you're probably going to find some sort of resistance. So if we rally back to 124, probably going to find some sellers. And then down here at 120, 265, that area, this is all going to be pretty good support. So you can see we're very much range bound as far as the euro goes. And frankly, looking at the euro, there's not a whole lot for me to do. I look at the euro dollar and I'm really not too enthusiastic about anything to do here. Hold on really quick. Okay. So here's the pound. Now the pound is what I would consider in a triangle pattern. So therefore, this pair, you can see right through here, this is going to be resistance as this trend line comes through, and it's going to be the 618 retracement as well. So as we come in to intersect, it's going to be about this 139.50. All right, support is going to be down here around this 137.50. So, you know, as this trend line comes through here. So the pound, you can see, is a little bit bigger trading range. Unfortunately, we're right smack dab in the middle of it. So again, you know, you look around at the pound, it's like, okay, what is there to do? Not a lot, because I'm myself wouldn't be interested in shorting it until it gets up here, and I'm not interested in being long until it gets down here. So, and because we're smack dab in the middle, again, you know, I look at the pound, not a whole lot to do there. All right, let's go over to the Aussie. Now the Aussie, this has, you can see how we broke out of this triangle actually on Friday. Now, why did we do that? Well, it was the lift higher in risk appetite. So stocks moved higher. You saw stocks actually, you know, really take a big leg higher actually on Friday. A lot of momentum, and that took these commodity currencies up. And so the Aussie dollar stalled right at the 618 retracement, right? You can see that we stopped right there. Now, since the market's been open, the Aussie slid a little bit, but any type of dip now down to like, you know, 78 and change, that's going to find some support, right? So I you know, am I too excited about buying the Aussie where it's at? No, but if you find a dip down to maybe the breakout point, maybe a little lower than that, that might give you a brand new opportunity to be on the long side of the Aussie. Kiwi dollar, very similar. Here's the Kiwi. Now the Kiwi, surprisingly, has actually been a little bit stronger. On Friday, it was a little bit stronger, so we pushed right up to this 73 and a quarter, 73.20. And we have a big range here. There's not a whole lot to do in the Kiwi as far as I'm concerned in this big range. Although I'd play the lower end of the range if we got down there. I'd play the upper end of the range if we got up here. I'd be a seller. I just don't know what to do with the New Zealand dollar in particular right at this moment in time. Hold on, let me sell. I bought some dollar yen and I'm going to sell it, and I just did. So let's skip that for a moment. Let's go down to the yen. So if you use ForexAnalytix, the only update I've done this morning on ForexAnalytix since I've been awake is the US dollar Japanese yen. And this is the update that I did. So the US dollar Japanese yen is back testing the broken downtrend line, which may allow for traders to establish longs for a move back up to the 107 level, right? So you can see this trend line, broken trend line. We came down and retested it, and now we're moving. We just bounced like 10 pips or whatever, and I just took a position as it was closer to 50. And I just sold it for like 10 pips, just playing it like that, because can we get down further? Sure. If we drop maybe down to fresh lows on the day, I'd be really interested in buying it down here if it got to 106.20, 106.25. But I'm just kind of playing it on the long side on dips, and and taking advantage of it. Now, Dan asked a question, and Dan asked a question. This is like old school Blake webinar. Who's got the bias chart? Well, I do, Dan. Now, how many of you guys, I'm going to ask you guys this question. How many of you guys used to listen to the Morning Edge webinar on WiseTrade? How many of you, and use the Q&A panel. How many of you guys used to listen to the old WiseTrade webinar? Yeah, do you guys remember the old T-chart? You guys remember the T-chart? I still do the T-chart. It's already done. So you're probably thinking right now, wait a second, Blake does the T-chart or the bias chart. So who gets that information? Well, who do you think? I give this bias chart to the people in the chat room every day. Every morning I go out and if you're a subscriber, I put this together for you. But I don't do it here on the webinar because I don't have time to. I do it for myself, and then I copy it and I give it to the people in the chat room. So if you're in this chat room and you're a ForexAnalytix subscriber, okay, you get the bias chart. See, I posted it, I don't know, 30 minutes ago, 40, an hour. There it is, right? So I post it every morning in the chat room, and you guys are on Jumbotron, so there you go. And so if you're a subscriber, you still get that. But yeah, I don't do it here on the daily webinar. I don't have time to do it. I'm going through the majors right now with you guys, but that's the kind of stuff that I kind of reserve for people who are part of the community. And for those of you that are all WiseTrade users, yeah, if you didn't believe me that that's the kind of stuff that I do every single day, every single morning, because it's how I trade. I've been doing a T-chart and a bias chart since I started trading. Literally since 1998, I've done a T-chart of some sort. So, it's like once I learned how to do it, which, I kind of did it on my own back in the late 90s. And so, of course, I do it every day. All right. Okay. So, and the guys and gals in the chat room, hopefully they Oh, I know they appreciate it. They, you know, everybody says, you know, thanks, and they're happy I put it together, because I'm just going through all of the majors every single morning, even before I do these webinars. I go through every one of the majors, and I identify where those key support and resistance levels. And then also, if you're a ForexAnalytix subscriber, that's where all these numbers come from in the majors. All right, right through here. It's because I update them. Make sure everybody's got the right prices together. Anyway, okay, enough about that. So here's the dollar yen. We were talking about the dollar yen. Should have some support down here at 106.25. I already spun out of mine, but I actually think the dollar yen's going higher. I think it's going higher near term. I think it's going lower long term. All right. And if you heard the week ahead video that I put together, it's because I'm looking at stocks, and I think that stocks they still have some distance to go. I think the S&P still has some room to go here. I mean, you look at the S&P, look what we've done. Okay. If you broke through resistance right here, all we're doing is we're consolidating above this breakout point. You know, people might be looking at the S&P going, oh, you know, hey, you know, S&P is coming down this morning. It's been dropping. Yeah, but realistically, you know, stocks are still pretty strong, and they're just consolidating here. So I'm expecting another leg up. Matter of fact, as soon as the stock market opens, we're probably going to get another leg higher. And what's going to happen to the yen when that happens? Well, the dollar yen is probably going to continue to push higher here, right? Right. And so if the S&P moves up, you know, another 20, 30, 40 handles higher in the S&P, you know, if we move up towards 2,800, 2,810, 2,820, well, then the dollar yen more than likely is going to, you know, come back to 107, maybe 107.50, and we're going to find major resistance up here. And I'm going to, and I know I said it in the week ahead video, but I'm going to tell you guys right now, you know, we make it anywhere close to 108, and I'm a seller. Anywhere back up to 108, and I can't wait to short it. But this is important to be really patient here. I mean, if you think about where prices are at right now at 106.60, we're at 106.60, but you know, 108, it's 120, 130 pips away before we start even getting into the vicinity of the 108 area where I'm a seller. So you have to be really patient here. It doesn't make any sense to just start selling. Well, I mean, it might make sense to sell the dollar yen here. I mean, I may be completely wrong, and the dollar yen goes straight to 105 from where we're sitting. But if stocks continue to go higher, the dollar yen's going to begrudgingly be dragged higher towards 107, you know, 107.40, 107.50, in my opinion. So once we start getting up into this, you know, you can see this is like my sell zone right through here, right? I could probably expand that out a little bit. This is all my sell zone. So whenever we start getting into this little red zone, this is where I'm going to be all about shorting dollar yen, shorting euro yen, New Zealand yen, Aussie yen, all that other stuff. Okay, dollar Swiss. You know, actually, you know what? I'll go into the dollar Swiss, and then I'll go into the Canadian. Here's the dollar Swiss. The dollar Swiss has a bull flag pattern set up. Now, this one's been off my radar for a while. I haven't been super excited about the Swissy in quite some time, but I'll tell you, we got a nice little, you know, bull flag set up, and you know, dollar Swiss can bounce. I mean, if you look at like, you know, we're pushing into all of this previous support zone. I mean, yeah, it could squeeze higher. If risk continues to go higher, if stocks continue to go higher, the Swiss franc's probably going to be sold. What I'd rather see, you know, regarding the Swissy, is I'd rather see this. You know, speaking, you know, the dollar yen going up to, let's just say 107.20, 107.40, 107.50. I'd like to see the dollar Swiss make, you know, press higher here. You know, we have this inverted head and shoulder pattern that's trying to play out, which could actually take us even further than what you see here. But you know, when you're talking about the Swissy or you're talking about the yen, the fact that we haven't pressed too much higher with stocks moving as strongly as they're moving higher, I'm surprised, frankly. I am. All right, let's go over to the Canadian. Now, the Canadian, this is a very loose base channel. I don't want you to get too fixated on these red lines, okay? So these red lines, again, I'm not looking at us challenging the underside of this trend line and going, oh, it's definitely a short here, because this line isn't perfect and it's not matched up really well to highs or lows. It could look something like this, but the US dollar Canadian is probably going to be a good short somewhere up here. And I'm already selling some, by the way. Just one of the positions I'm taking is short the dollar yen, or dollar Canadian. Now, why do you think I'm shorting the dollar Canadian? I'm going to ask you guys this question. You can give me one of two answers. So use the Q&A panel. Why am I shorting the dollar Canadian? Give me one of two reasons, or give me both reasons. It would be even better. I'm going to sip some of my coffee while we talk about this. Chad, good answer, by the way. Dan, good answer. JT's got them both. JT, I'm so proud of you. That's so awesome. Okay, you guys are all answering right now. And for those of you that are thinking tariffs or NAFTA, right. Because if we're going to be a little easier on Canada, then I really want to buy the Canadian dollar. That's the whole reason why we got pounded from the 130 level. But the other reason is because equities are moving higher. Now, I know stocks might be moving lower at this very moment in time. I get that. Look at the hourly chart. Here's the S&P pulling back a little bit. I get it. But if stocks continue higher, the Canadian's going to outperform, right? And then you got, us being more lenient with Canada. And, let's think about this. Mexico and Canada are going to be excluded from tariffs. Great. That's fantastic. And probably they will continue to be excluded from these tariffs because it's going to be in their best interest to work with the U.S. and try to, negotiate on trade. And as long as the negotiations are pushing forward and, we're not getting any type of, real pushback from Mexico or Canada, they're going to continue to be excluded from tariffs, and we're going to eventually get a better trade deal with them, which is bullish the Mexican peso and the Canadian dollar, because we're not going to be pulling out of NAFTA. I really don't believe that we're actually going to do that. I think that's just a threat. But it has been a real risk for the Canadian and Mexican currency. And so if we do patch something together and it ends up some sort of deal gets done, well, they're going to be excluded from tariffs, and that's going to be good for the Canadian and Mexican peso. So I'm going to play into that theme right now, and as long as stocks continue to go up, then it's a double whammy. So yeah, the dollar Canadian might be grinding higher right now, but I think that this is going to be short-lived, right? It's going to be something like that. Okay, that's the way I'm seeing it. So I'm willing to buy some Canadian dollars at this moment. All right. Let's see. Let me go. One last thing I'm going to go before I turn it over to Stephen to actually talk a little bit about this this competition that we've got going on. Let's talk about the yen. Okay, so here's the, oh no, I already talked about the yen. Let's talk about the peso. Okay, so here's the peso. Peso is actually pushing, into some resistance here, and the peso is a little trickier. One of the things about, and I, by the way, I did buy some US dollar Mexican, or I shorted some US dollar Mexican peso. The one thing I don't really like about it right now is we're pushing a little past this resistance zone that I'm seeing. So I'm going to be watching it very carefully, but we might have a hourly inverted head and shoulder pattern. If stocks continue to sell off, that's going to provoke a little bit of a move higher in the US dollar Mexican peso. However, one of the things about the peso is we're near this, you know, very loose base channel. All right, we have the 200-day moving average, so I'm treading very carefully, and I'm not taking huge positions, selling the US dollar Mexican peso, but it actually started to show its hand on Friday. The US dollar Mexican peso is outpacing the dollar Canadian, and it's still doing that right at this moment in time. So I have to watch it kind of carefully here. But the US dollar Mexican peso has been slowly grinding from, you know, the 19 level and pushing lower. All right, now I'm going to ask my colleague Steve to see if he's here. Steve, are you here?
Absolutely, mate.
All right. So good morning, guys. If you guys haven't done the ForexAnalytix contest, I just put the link in the chat box. Make sure you do it. So Steve, tell us a little bit about this contest that we've got going on.
It's a simple concept. You know, people have to they have up to Wednesday to guess or anyhow estimate how 5 different instruments are going to close. Not on this Friday, next Friday, the 23rd. We wanted, you know, the end of the competition with the date they're guessing to have some distance. So, you know, people that do it on Monday or on Tuesday or on Wednesday don't have like, you know, much difference of an advantage. And, you know, after we get the results, obviously on the closing of the 23rd, we're going to see, you know, how many people got them all right. And among them, we're going to have like, if there are more than 10 people, or even for the 10 people, you know, because the first 3 positions, you know, have different prizes. We're going to have a draw. It's going to happen online on Monday, the 26th, on this webinar, on Face Webinar. And, you know, the first winner gets a 6-month subscription in ForexAnalytix. Second winner 3 months, third winner 1 month of subscription, and everybody among the 10 first they get a t-shirt, a mug, and a mousepad from ForexAnalytix.
All right, so it's a pretty it's one thing that you guys I want everybody to understand here is when you're guessing where the close of the euro dollar is going to be, or the S&P, or, you know, you're choosing these ranges, right? And when you choose these ranges, you're getting, you know, all your answers, you know, obviously if you get them all right, you're going to be put in the bucket that you know, you're in the running for first place. And then, you know, what we're going to do is we have the system that we're using that we've decided to use will randomly pick the winner from those. Right,
yes,
Steve?
Blake.
All right.
We are actually going to do that online on Monday. I mean, we're going to know who got all of them right. Of course, we're going to have a list, and, you know, there's going to be a draw on Face Webinar through, you know, the proper algorithm, etc. So we're going to see live who is first, second, etc. Of course, it's only going to show like partial emails, you know, so there is not going to be like, you know, disclosing. Anyhow, the only thing people need to put in to participate is an email address. And of course, we're not even going to show the full of it, you know, during the draw period. We don't want to disclose personal information of people. So that's it. It's as simple as that.
Right. It's a lot of fun. And the guys, the prizes are, you know, first place, you get a 6-month subscription, second place, 3-month, third place, you get a 1 month. And the first 10 winners will get a ForexAnalytix t-shirt, mug, and mousepad. And obviously, if you win for second or third, you'll get mousepad and mug and all that fun stuff too. So, guys, Steve goes, how large of a range can we use on our guesses? Well, the ranges are here.
The ranges are preset.
So all you got to do, all you've got to do is check the box. you could say, oh, the closing price of the euro is going to be here below here. But remember, you've got to get, in order to really win, in my opinion, you've got to be one of the people that guess all of these right, because we'll have so many entrants,
Yeah,
right?
that's my guess as well, Blake.
And then you put in your address, right? And then once you
Yeah,
put
and
your
you
address,
submit.
and then you're entered. So it behooves you to look at all these ranges, look at your charts, and say, okay, where are we going to be on the 23rd of March? Which is 2 weeks from now. Where are we going to be this Friday, and try to guess. And it's easy as that, guys. So you guys have fun with this. I think it's going to be cool. And it gives you an opportunity to win, and even if you don't get the grand prize, you get some cool Forex analytics stuff. So have fun with it. I'm gonna I'll be making my guesses today too. See if I can win. Not that I've got all the stuff. So it's not like I just want to see how well I do.
If
Anyway.
you get really lucky, Blake, we're going to give you a 6-month subscription to Forex Analytics.
Right,
so you can hope for that.
There we go. There we go. All right. Well, hey, I'm going to pass it over. You are. Do you want to grab the screen from me?
Absolutely.
It'd be easier for you to grab the screen for me because I don't know which one you are.
Here. Absolutely.
All right. All right. Perfect. And from what I understand, I believe Dale is back with us.
That's what I think as well. Dale?
Yes. Hi, Blake.
I guess correctly that the alarm didn't go off.
Yeah. Good. Yeah.
Hey, listen, I've done it, and I told everyone, I'm like, Dale's done it before. It's not, he's fine. He probably just
the alarm at 5 to 5.
Yeah. Well, glad that you made it, and glad that you're with us, Dale. And I'm sure your guest that's coming on today is happy that you're here too. So
yeah, he's in the house already. So looking forward to talking to Steve, and great analysis as usual. And I think the euro will be at 1. That's my guess.
Oh, well, okay. Well, you better enter too. I want to see how well you do.
All right.
And you never know. You might also win a 6-month subscription deal.
All right, guys. Hey, have a great trading session, and happy that you notice our attendees are lower right now, because I'm telling you, this happens every time there's a time change.
We have time change, indeed.
It takes everybody a week to figure out, oh my God, I'm missing the webinar. Like in about 30 minutes from now, you're going to get a bunch of people popping on going, oh my God, I forgot about the time change and the change of the webinar time. And yeah, so that's what happens. All right, guys.
Indeed.
Good luck today. I'll talk to you tomorrow.
Okay.
All right.
Good hunting. Hi, Steve.
Hey, Dale. Personally, I have no idea how you wake up 99 out of 100 days in the middle of the night.
Yeah.
Personally, I believe that
you understand. You have a son. I mean, you're able to work at times without 0 sleep. I don't know how you do that.
Yeah, but in all honesty, if I had to do a webinar at 5 o'clock in the morning local time, I would probably go directly staying awake, and then going to sleep.
Almost did that last night. Okay.
Waking up in the middle of the night.
Yeah.
Yes.
So I was going to show something in the end, but Blake covered it pretty good, and we'll see what develops. I like what he was saying in the end. I'd be interested in seeing what you're looking at. Up around 107.60. I was hoping it would go there first before it dipped. But then on the daily, if we go back down to 105, that would be a third drive to a bottom formation. But a lot of people are talking 103 or something. See, you've had 1, 2, and maybe one more.
Yeah, I see it.
Yeah.
I see it. Yes, and something. It's Blake said that yen the USD yen might rebound from here, and I also see the potential because we've had this descending channel. Near the end of it, first of all, we struggled a little bit with this horizontal area of support, and we finally found a bottom, a short-term bottom, at least at the 127% extension of this corrective move higher.
You show the divergence there as well.
And we had very clear divergence here in the RSI, very clear. So what
with your
can happen?
trend line, it could go all the way up. It looks like 109 has shown us. Yeah.
Yeah,
Okay.
it depends on when we get there. It's like anywhere between, like at the moment, anywhere between 108.50 and 109. I mean, depends on how fast we move higher. But one thing is for sure, definitely a retest of this trend line looks like quite a high probability. I mean, the USD yen has been beaten down quite a lot. The sentiment had shifted quite a lot. So why not? Why not? I mean, I would definitely not be short the USD yen as we're breaking above this channel. Okay, so obviously somebody has to respect the downtrend, but definitely a short-term rebound, can be in the cards. Now, for me to start looking, the USD yen through a different set of eyes, we would definitely need to break above this trend line, because the break below this trend line was a major market development, because if I zoom out, you can see how long term. Unless we break above it, I will maintain in the interim a bearish bias. But as I said, I wouldn't be short at the moment. So this is the situation with USD yen, and given the fact that we had a rebound in risk, and we had a rebound in many of the commodity currencies, and we've definitely seen yen weakening finally. The currency pairs that benefited the most from this combination of factors are definitely the commodity currencies against the yen. So we've already seen like a very strong move higher. I mean, within a single week, we saw Aussie yen jump at its highs almost 300 pips. After finding like a very strong support area, you can see it was the lows here. And the Kiwi yen more or less did the same, once again finding a very strong support area. Actually, this was an even better defined one, because it had acted as support resistance even more times in the recent past. So, we've seen some nice rebounds here. The CAD yen, which was by far the yen cross that had been beaten more than anything else, also found support. Now, having to do with the CAD yen and having been the weakest one by far, I have to say that, if you're looking to be short again a commodity currency against the yen, I think the CAD yen, given the undoubted nature of the impulsive move lower, is probably the one. I'm looking towards the 85, 84, 80, 85 zone. I think that if we get there, we actually drew that at the beginning of last week, so you can see it has been working nicely so far. So this is one of the currencies I'm looking to be involved with if it behaves properly, because I think it's the best opportunity to realign yourself with some yen strength if that manifests, like some days from now. I think that the break lower in the CAD yen was emphatic. I think that this last leg lower is probably wave 3, so we should at least have one more move to the downside after this little correction. And as I said, I think this zone is a very good one. So this is what I'm looking for. Now, having to do with my personal trades, I got on Friday, I got stopped out on 2 of the 3 in profit. I mean, my limit order for half of my trades were hit, so I'm not involved anymore with the SPX. I'm not involved anymore with the Aussie USD. I took some profits there to the other half of my position, since they didn't keep moving higher. And something, especially for the Aussie, for indices, I'm not really convinced, as I've said, that they're ready to move to new highs from here. I'm actually pretty much doubtful. I know that the Nasdaq has already printed new highs, new all-time highs, but I'm really not convinced that we will already have the momentum to do the same with the Dow, the S&P, etc. I can see the probability that being high, that we keep like oscillating between the highs and the double bottom. But having to do with the Aussie, To be honest, I know it will sound weird, but given the structure here, I'm even considering of going long on a dip because I see this as a wedge after a move higher. I don't know if it behaves well and it like dips lower in a slow overlapping method and like find some momentum. I might even think of buying it for a little period of time. So I'm quite happy. I'm out of being short here. Anyhow, I took very good profits. I almost got the bottom actually in the first half of my trade because 77.40 was my first target, which was limited out, and I didn't get so much profits on my second half. But I don't want to try to interpret the market as something it isn't. So as I said, I might even be looking to buy it on a dip lower if it keeps behaving well. My only other position is that hasn't changed is palladium. I'm still holding half my position in palladium. The fact that it's struggling to even overpass 1,000 again. So I've already took half my profits at 1,000, and I really believe that it can actually make it down to 900, 910. So nothing has changed there as well. Now, having to do with currencies that I think Blake didn't cover the cable at some point. I was in a call, but I think he didn't. So I have to say, because we always have people asking, of course, it's one of the most popular currencies. I have to say that nothing has changed in my view with cable. I mean, cable remains constructive because the move lower is undoubtedly, in my opinion, corrective in nature. It's overlapping, it's low. So I think that at least one more leg to the upside is missing here. And as long as this ascending trend line is holding, and especially this horizontal trend line at 136 is holding, I will remain of that opinion that I will be looking for cable to actually print new highs. I'm even actually considering of buying a little bit here, I have to tell you, because this might have been the low. The 137 and change that we had might have been the low. So I'm even considering buying like 1/3 of a position and either adding a little bit lower or adding if we actually break higher. What else? Yeah, euro. We already said it definitely moved lower on Thursday against expectations having to do with what the ECB said. But the same situation applies here with the euro. I mean, I said it on Thursday as well that even if we turn lower, as long as this move has this kind of characteristics, I will just be viewing it as a correction. So same thing applies like what I'm saying in cable. But €1 pair. Actually, I want to show a few crosses that are quite significant. One of them is the euro pound, because the euro pound proved once again the significance of this descending channel by getting rejected when it was actually looking that we're finally breaking above it. It got rejected once again. So if you're a medium to long-term trader, obviously you don't want to be involved with this as long as it remains in a choppy, slightly descending range. But on the other hand, I have to say that I'm happy because this keeps my main case scenario that we will first see another move to the downside, and before moving higher. So I like this rejection. I would like to see euro pound moving lower towards the 83 area. But yeah, I'm not involved with it yet, and I'm really not looking to be involved until it finally does something here. Pairs though, and I know that Abdul is going to be happy with that because he keeps asking all the time about it. Pairs though that have given us very strong signals are definitely mostly the Euro Aussie and the Euro Kiwi, simply because we were looking higher for the Euro Aussie because we've been in a well-defined uptrend, etc., etc. But the kind of rejection and the kind of momentum we got last week, and it seems to be resuming this week, is something that you shouldn't ignore. Because if we go to lower time frames, this move lower definitely looks impulsive to me. So I think that this might be the beginning of a much deeper correction, which we haven't had, in some time. So I mean, if I was long, which I wasn't, I would definitely cover, and I would be looking for more weakness before we can actually resume higher. Obviously, not obviously, but for me, confirmation, we're going to have confirmation if we actually break below this horizontal area of support. But I've already seen enough to be mostly looking, if I wanted to trade it short term, to short into bounces for a period of time. As I said, that doesn't change that the medium term trend remains higher, but in the short to near term, we might be looking for something that will be bearish. So I wouldn't exclude like a move significantly lower towards the 152 area once again, perhaps even lower towards 150. Okay, I know it's just the beginning, but in the short-term time frames, as I said, the signals are quite clear. And Euro Kiwi, on the other hand, is breaking, is threatening to close below this ascending channel's trend line support today for the first time, like in a year. And that's also going to be significant. So I think both of these pairs are quite interesting, and they're definitely displaying some change of behavior. Okay. Now, Pound Aussie and Pound Kiwi are holding better. So given the fact that Euro Pound rejected from what I showed you, if you want to favor weakness of Euro or Pound crosses, I would be looking for Euro crosses. So if you want to be short, you'd rather be the Euro Aussie or the Euro Kiwi instead of the Pound Aussie and the Pound Kiwi, because the Euro Pound getting rejected from where it got, might have a period that it will underperform. Regardless, we are also seeing here in the Pound Aussie, in the Pound Kiwi, some signs of weakness, not so profound still. As you see, they remain in like consolidations, but especially Pound Aussie, has been showing some signs of weakness here, and it's currently testing a horizontal support area. So you should probably be careful here as well if you're long. So I think these are quite important to note because last week they gave us like some interesting developments. Now, having to do with crude, I know we have a question. We can still not say with absolute certainty if this is a triangle we're trading in. Okay, something like this, or if this is going to be an ABC. So this question has not been answered yet. Two different probabilities. Both of them, though, should end with a resumption of the uptrend in crude. Okay, so either we get the triangle interpretation or the ABC interpretation. I would still be looking for more crude strength from here. Okay, but we can't tell with certainty if it's going to come from somewhere here or if it's going to come from lower from the 55 area, because we don't have enough price action yet. Obviously, if we break above this area, the triangle's interpretation is definitely the correct one. And now if we break below this area, obviously we're going for an ABC, and probably if we break below here, we're going to go all the way towards, if not to test 55, we should get rather near it. Okay. Until then, I think that you're either already involved in the trade and you're patiently waiting to see what's going to happen, or just stay on the sides, in my opinion. Okay, let me have a look at a few of your questions. Euro yen and pound yen. Absolutely. Let's have a look at them both. Euro yen still struggling with this resistance. We had noted the first time that we tested it how important it is. Obviously, as long as this 131.50 area, because it's not like a level, it's an area like 20 plus or minus 20 pips. As long as this area is holding, since you can see how significant it had been initially as resistance and then as support, we have to respect the previous move to the downside, right? So as long as this area is holding, I have to respect the fact that euro yen might push lower towards the 128.50 to 129 area. Now, if we break above it, it's quite likely that we're going to go back to and retest this 134 and change area. But in between these two areas, I would probably just, not get involved in any way or form. So that's what I see with the euro yen. Now, having to do with the pound yen, let's have a look at it. Pound yen also retesting. See it here, this trend line support, which is now broken, as resistance. So obviously, and backtesting the 148 level and the 200 EMA. So obviously, you see what I had drawn here. So obviously, this is a very strong confluence of resistances. I would not be surprised at all if I saw a failure here. I would definitely not be long just right on the confluence of resistances. So if you're asking me here, definitely an area that I would even consider if I was a short-term trader to be short, because not because I think it's a very high probability trade, but definitely the risk reward is like amazing, right? You have a confluence of resistances. You're going to know if you're wrong very, very, very soon. You wouldn't want to see like prices above 149. And if it gets rejected from here, it should at least push towards the lows once again. So it should at least push another 300 pips to the downside. So I see here at least a 3-to-1 reward to risk ratio, and it's quite a nice position for the pound yen. Okay, let's see what other questions we have now, having to do with let me have a look specifically at indices. This upper line of course is completely arbitrary because it passes only from one point. I drew it just to several days ago just to show one of my possible interpretation, which is a triangle, right? So you shouldn't be paying attention to this, but the fact remains that I consider the high probability that at some point below the highs we're going to get rejected and resume in some choppy manner. I doubt that we are ready to breach the all-time high yet, and the same applies to the Dow. Okay, I'm not saying that I can't be wrong. We've already had a decent period of consolidation, but I think that more is going to be needed. That's what my gut feeling tells me. Anyhow, I'm not involved with it anymore. I made a very nice trade to the downside. I got stopped out on the other half with minimum profit. So even if it breaks to new highs, it's not that I'm going to personally be hurt, but as I said, my intuition tells me that we shouldn't be able to slice through it as easily. We almost tested the 78.6 earlier today. This might be an area that's going to turn us lower for at least a little period of time. Although I have to say that I'm seeing the market, I'm seeing the risk mood being quite good, but I don't see it happening. Regardless, even if we do print new highs, my experience tells me that RSI is going to be quite significantly diverging. You can see how overbought the daily RSI was, and we're currently below 60, right? So this is something to notice as well. Even if we break new highs, I'm going to be pretty unconvinced about what's going to follow from there. Okay, I think that this move lower might have done more damage to the market than most people realize. And I do think that volatility is not going to go back down to 8 or 9 handles and resume months and months of the kind of trading we had like last year. Okay, let's see what other questions we have. Copper, yeah, absolutely. Stages an impact on FX from world oil funding shortage, LIBOR spread above 2% first since 2008. Thanks. and the zero hedge. Listen, there are a lot of, yeah, this is a factor that can play a role. And, let me also put the article that you linked for everybody to be able to see here in the chat from zero hedge. This is a factor, but there are a lot of factors affecting the US dollar at the moment. And pinpointing exactly which one is the most significant is very hard to do. I think it's just one of the factors that affect the dollar at the moment. Okay, we have a question about Bitcoin, and something, we haven't seen the cryptocurrencies for a long period of time. So before I go to copper, let's briefly have a look at them because they're definitely interesting. As you see, Bitcoin got rejected from the channel's resistance once again. But on the other hand, it's making an effort to hold the 200 EMA. So obviously the situation here is as follows. As long as we are capped by this channel and its trendline resistance, obviously we remain at least in a long-term correction, at the very least, if not to a bearish trend or whatever. Now, on the other hand, even at 9,000, this is a significant price for something that I need to remind you was trading like a year ago. Let's go exactly a year ago. It was trading down at just above 1,000. So, we're not seeing like the utter destruction for cryptocurrencies. I know that for a lot of people that got stupidly, in my opinion, involved in prices, in a ridiculous prices like 15,000 and 20,000, obviously being down to 9,000 looks like, a huge move lower and like a destructive move lower. But in all honesty, if you look at this chart and the move to the move below, it still looks like a big correction to a massive bull market. So I'm more or less neutral at the moment at current levels. And as I said, of course, a little bit bearish given the fact that we're holding this descending channel. But I'm not seeing like, the indications here that Bitcoin is headed straight for destruction from this level. More or less the same applies to Ethereum. You can see here equivalent situation. Ethereum also, for Ethereum, it was much easier pinpointing a bottom. Why? Because it was a perfect ABC. As you see, the projection of A from B was exactly the low. I mean, it was like $5-6 of difference. So my technical view on Ethereum remains more or less the same I just explained for Bitcoin. Okay, now let's have a look at copper. Same situation here. I mean, as we've said the previous times, this overlapping move looks corrective to me. So I would expect that as long as we're holding this horizontal area, copper will resume to the upside at some point. As simple as that. Okay, nothing has changed for me to change my mind here. The market structure definitely hasn't changed. If you're reluctant to short the USD yen, do you think there is a decent upside in indices as SPX short from higher levels? And if yes, how much more upside do you think you see? Okay, Angelo, I think that I already answered this question because we went over the SPX and the USD yen. First of all, Blake said it as well. I'm saying it as well. I do see the potential for a rebound in the USD yen, but I cannot see a strong rebound here unless we clear this trend line support, which is now broken and has a good chance of acting as resistance. So do I see the potential for a further rebound in the USD yen? Yeah, absolutely. But I cannot tell you that I see this as a big move that's upcoming, because as long as this trend line is capping, we might just have another 200 pips to the upside, right? So I'm going to be looking for more than that only only if we break above there. So as long as we remain below there, I'm going to be viewing any rebound as a shorting opportunity, any rebound towards this trend line as a rebound, as a shorting opportunity. So the same more or less applies to stock indices. I mean, I'm going to be viewing any rebound as short-lived, and unless proven otherwise. So I think this way, I'm answering your question. And we separately had a look both at the USD yen and the SPX, for example. So you know what I'm looking there for as well. So that's it. Let me see. I might have missed a couple of questions. Okay, no, that's Euro Swiss. Okay, one last thing, and you're good to go. Euro Swiss, I mentioned about a flag. Yeah, absolutely. This is one of the few times we had a triangle. Usually triangles break in the direction of the previous move. So I would have expected one more move to the downside for an ABC before higher. Unfortunately, directly broke above it, and somebody's mentioning that it looks like it's flagging, and I will agree with you, because I don't know if this is a flag or a little triangle, but regardless, this seems to be like a short-term bullish consolidation. And, if this proves to be the case, I think that the next stop is going to be roughly 120. We had said, since we were breaking above there, that Euro Swiss might move all the way back to 120. And I think we might actually see this happening this year. Okay, thank you, Dale. Enjoy the interview, my friend.
Thank you, Steve. Okay, Steve, I see you. I'm looking forward to hearing your voice and making you the presenter. I want to thank you in advance for your time today. All you have to do is enable your mic and your screen share, and we'll get going. There it is. Enable your mic.
Hello.
Hi, Steve.
Hello, Dale. Do you see my screen?
I do see your screen. Let me turn up my volume a little bit. You're a little low, but I want to be able to hear you. Great to hear your voice. And, we know each other from Twitter, but I feel we've taken a step towards you really becoming my trading warrior brother, Steve. I appreciate you. I really appreciate you being here. Your content on Twitter is excellent. That's how I noticed you. Why don't you?
Same to you, Dale. Thank you.
Okay, well, why don't you get into a time machine and tell us how it all began for you to get into the trading industry? And
it is already coded in my Twitter name, which is Steve Walker 36. So I start trading at 36 years old, almost 10 years ago. So, of course,
how did it happen? What did someone? Did you read a book, or you had a friend that was trading? How did it happen for you?
No, it was the movie. I watched a movie about the trading, and I decided to start some. I decided to trade. I am a coder also, so I said I can fix this issue. I can make good profit in 2 or 3 weeks time by a good code. So I start coding. And I'm still coding after 10 years. So it took no more than 2-3 weeks, unfortunately.
Yes. Yeah, most people tell me that it takes about 4 years. Was it that way?
Yeah, exactly. So the first 3-4 years wasn't so good. It was a struggling period of time. Losers, winners, but overall net loser, of course. So it took time to put the things together. But at the end of the day, things happens. So
were there any books or any mentors during that journey? I see you have what might be a pitchfork on your screen.
Yeah. For the first years of trading, I was joining the Woody Club. You remember? You know him, Woody Club.
I don't.
The Cam Wood. The CCI club. He was trading with the CCI anyway. Okay. So he was in US. So I joined his club for some time. That was the only place I joined for some time. In general, I learn by reading the internet, you know, like any other else does. So it was a hard way to learn trading, because in fact it's after you learn it, it's easy, but until you learn it, it's too hard to understand what's happening behind the charts. So it takes time, really.
It's also hard to discern what is valuable on the internet and what is just really hype.
Exactly.
How were you able to do that? Trial and error?
It's learning by doing. The most expensive way of learning, you know. I did it learning by doing.
Okay.
So it takes time doing that way. Maybe it should have been better to work with a professional at that time, but I didn't take that way. Maybe if I start trading today, I would do it. I would probably do it, but when you think you can do it, you don't take this way. But unfortunately, it's better to take it.
Okay.
This is my conclusion after 10 years.
Okay, well, 10 years, it's definitely, you've shown perseverance, because a lot of people give up. In fact, you know what, in my opinion, a lot of people give up because they're not willing to put in the hard work. And, you know, did you journal your trades, do anything like that to kind of really distinguish when you do a trade, what you're doing right and what you're doing wrong? You know, I'm a big believer in journaling for
yes,
traders.
Exactly.
Okay, so that helps.
Yes, without the data sheet, it is not possible.
Okay,
There.
All right.
I put a data sheet and I put all the trades in it and analyze them later, because market is changing. You should improve your trading. You should move forward, because charts are not staying at the same place all the time. Things are changing. The setups working 10 years ago are not working today, and today the setups working today will not work 10 years later. So you should always improve yourself, and you should adapt the market because it's changing. For example, after 2008, everything has been changed in the market, because when you look before 2008, after 2008, you see different charts, definitely. So algorithms are playing big role actually in the market. The high frequency trading, algorithms, the big banks. So we should all adapt all these things. The only thing I found out after these years is use your stop loss. That's it. Trade with stop loss. Don't lose your account. Prevent from the big losers. The big winners will follow. This is my motto. This is how I trade today.
Yeah, I went to your website, Steve, and I liked that one section about what you're not. And you have a whole list of things, like, first of all, you're not the Holy Grail, because it doesn't exist. So in your teaching and mentoring, you give realistic expectations for your mentees. You want to go over a couple of them? That's the one I remember, what it's not, and you said the Holy Grail. What else isn't it when you're teaching people?
Dale, it is all accumulation of 10 years of experience, so there are too many things. The mental state is very important. So the trading is not like a driving car. Trading is like a piloting a plane. So you have to mental state in place, you have to strategy in place, you have to money management and risk management in place, and when you put all these things together, then you can make profit. If one missing, then your plane is crash, because it is not a static balance. This trading is dynamic balance. So you should put everything in place, then this will come together, that gives you gain. So my the thing I try to explain people I work with is, don't afraid from the loser, because it will happen, but don't make it big. Don't turn it into a catastrophe. So single trade will not make you and shouldn't break you. So,
and you never had that big blowout where you said, you know what, I'm not going to put a stop in, I'm just going to use a mental stop and I'll get out, and then it goes through your mental stop and you're still not out, and then you go, you know, maybe I'll average out here. Have you done it? I mean, almost every landmine that's possible. I've done it, or I've seen people do it, and sometimes you even have to learn by getting hit in the head with a hammer, don't you?
Yes, in the first years of trading, I blow 2 accounts, not big, but I blow them, because I think that I can do anything. So I was overconfidence take the account from me. So that's one thing. The other thing is you should okay, I have a picture beside my computer, which is the trading phase. I tweeted last 2 days ago. So anything doing over, like confidence, like greed, like anger, is affecting the trading. So you should stay cool. You should stay cool and stay still to make real profit, because the market makes you mad. That okay. The people thinks that the brokers take their stops, blah blah. Okay, this is one thing. They get angry because their stop taken with one pip, blah blah, in the live trading. That's okay. But I did simulate thousands of different algorithms in the past years, and when I'm simulating the history chart, I also see that many times my stop taken with one pip. So that is not the reality. We just should stay cool when trading, and we just shouldn't turn the losers in the catastrophe. That's it. Just prevent from the big loser. The big winner will follow. So this will make okay for the retail traders. I give only one advice: your risk reward ratio should be good.
Okay. What do you recommend? 3 to 1.
Starting from 2 to 1, you can go up to the 10 to 1 is too not realistic, but 2 to 1, 3 to 1, 4 to 1 is good risk reward ratio for retail traders. If you're a big bank, that's okay, do whatever you want. You have playing with the big money, you have the margin of drawdown, you have the low cost and everything. But if you're a retail trader working with a retail broker, your risk reward should be good. That's the only way making money with manual trading. If you are a retail trader, if you are trading with algorithms, you really need low cost, and I didn't see any broker that giving that low cost to a retail trader. So for the retail trader, you should take the risk lower and the reward bigger. And this is one of the most difficult thing that I challenge in my trading life, because staying in the winners is very difficult. Okay, you can fix
my shortcoming. Yeah. So how do you overcome what I call first daylight syndrome? You know, say for example, you had maybe 150 pip objective on your trade and you're up 50.
Yes.
How do you overcome not getting out and, you know, thinking, well, you know, I'll take 50 and I could always get back in cheaper than my exit. Yes. How do you overcome that?
That is why I'm explaining my trainees that you should put the data sheet together, that you should track your the trades, you should put your data in an Excel sheet, that the MFE and MAE data, that will give you how your trades are going in the past. So then you can create a graph from that, and you can see what is your trades nominally going the distance. So when you know that, then you can be sure that you don't have to exit with 50 pips, because your trades in average is going to 150 pips or 140. It doesn't matter. 10-5 pips is not very important. So
how about partial profits at 50 on a portion and trailing your stop for money management? Do you teach that?
Okay. I don't use trailing stop because I don't believe it, because you know there are too many spikes in the market. So those spikes take your but that's all. Okay. So from trader to trader, from retail trader to trader, things are changing. So what I do is right for me, might be wrong for somebody else. So everyone should put their data in the sheet and analyze it. Then they will find out that which is good for them. This is what they should do. For example, I'm actually the one guy from Russia I'm working with. I teach him how to put the data sheet and everything. Now he knows that his trades, his intraday trades, is going 40-50 pips each. So these are intraday trades. Right. Okay. Trading with 15-minute charts or smaller. So now he knows that his trades are going 40-50 pips. So why should exit early? But this takes time. So this is the most difficult part of trading, staying in the winners, as I told you 5 minutes ago. You also agree with that, because okay, you can put the stop and you can wait. Okay, the stop is taken, I'm out, I will not go on this, I will not force this trade. That's okay. But staying in the winners is definitely needs the data sheet, and this data sheet definitely needs an MFE data and MAE data to put you into the place of seeing what is average of your trades going for the favor of your entry. So when you know that, then you can remember the moment that, okay, I know I have data sheet several times my trade went to 150 pips, and I have write it down, I see it. So now you can wait until 150 pips. That's what you can do, because the issue is when you trade with stop loss, your stop is mechanical. You can exit either with stop loss or with a mental exit. That's okay. I use stop loss for an emergency exit. I most probably exit before the stop loss. So stop loss is to save the account. That's it. But on the other hand, on winning side, you have no limit. It can go 100 pips, it can go 1,000 pips. So which one you prefer, 100 or 1,000 or 10 pips? Most probably people preferring 10 pips. But the data sheet tells you how many pips the mostly weighted average your trade goes. So when you work with this data, then you don't get upset if you exit after 100 pips if it goes 10,000 pips, and you don't get upset if you exit if you wait for 100 pips but it returns and takes your stop loss or break even, because okay, you know your data and it tells you that it will go there sooner or later. Updating this sheet, and okay, I advise every trader that they should put their trades into data sheet. They should do it. There is no other way.
So you're a big believer. Write it down. It
yes,
becomes more tangible to you. Anyone who does NLP would agree with
exactly.
you. So why don't we switch gears? And it looks like it's Japanese yen day. Everyone's talking about the yen, and
yes,
tell us a little bit about your setups and things that you use. I look at this chart and I see a 2 drive to a bottom situation, divergence, okay, second low. I'm interested in all your lines and moving averages and why you use them. So why don't you tell me about what I'm looking at?
Okay, this is a code I created for myself, which is, I call it mechanical swing channel. So there is no parameters to set for this setup, for this code. Everything comes from the market. So it draws the channels and put the moving averages related with the channels. So the data you see here is actually the daily, monthly, and weekly. If I
So we're looking at moving averages. What are the dotted lines? Just channel lines or a pitchfork?
These are the channels.
Okay.
These are the channels. So this is the 4-hour chart. This is the only data that on the 4-hour chart, and this is the daily chart. So I put the other data on the chart, which is multi-time frame. It becomes multi-time frame. I put daily, weekly, and monthly. All okay.
Interesting. All right. So on your daily, you have shorter time frames and longer time frames. You have all the time frames.
No. For daily, for every chart, I have the higher time frames on single chart. So this the white lines are the weekly, the green lines are the monthly, and the red lines are daily. So I can see multi-time frame data on this chart, and this chart tells me, okay, if we go to monthly chart, I'll show you that.
All right, that's cool.
It is,
and they're not that far apart, so you kind of have. It's nice when you have confluence between the different time frames, and the lines come in the same.
Yes. So this is the DTL chart I use. This is also a self-coded algorithm to see the trend lines. This is the derivative trend lines. It is okay. Here, the Japanese yen, as the other Steve has explained, it is actually broken the main trend line down here. So I'm pretty bearish with the Japanese yen, euro dollar Japanese yen, dollar Japanese yen. Yeah. This is what I see actually on the chart. So
all right, let me stop you there. Go to that chart you have. Go back and let me. No, it was, I think, the monthly.
Okay, the monthly one. Okay.
The breakdown of an uptrend, which a lot of people are looking at. You had an uptrend line. Okay, so you have an uptrend line. Is the only thing that would change your opinion about the yen would be getting back inside of that uptrend channel, and if it is unable to do it, your next lines are all the way down at 88.30. Is that a potential target for this breakdown of this uptrend?
Okay, here's the deal. the issue is this trend line is a very common trend line. So what I believe is when we see a very common trend line, then I think that it is not going to be work well. So this is what I think. I'm still bearish with Japanese yen here.
Okay.
Because here is for me the selling power is here, and it is pretty bearish here. So I don't think that it will climb up. Okay. The other thing is this. The dollar index. The dollar index is pretty bearish here. So I'm expecting it to go down to something like 80 here. So
85,
this
85,
80.
what did you say, 80 or 85?
80. I expect it to go down to 80 here.
Okay, to the breakout.
Yes, yes, here. Yeah.
Okay, exactly. I see it. All right.
I'm expecting it to go to down here. Okay, this might be, I might be wrong. So nothing is
right. That's okay.
Nothing is 100%.
Everything you say here, people take with, look, we're all adults. You know what? We're all captains of our own ship, and
yes,
we take whatever anyone says as intelligence gathering, but we all make our own decisions. So
of course,
don't worry about it. Okay.
So here is the trend line. One. This is the this is a bounce here. This trend line has been rejected. All this down. Right. So I don't see any reject here on this trend line. It may climb up the trend line. That's another possibility. It can happen. But actually, I don't think that while the U.S. bond yields climbing, I don't think U.S. dollar will strengthen. This is what I think. So I'm still bearish on dollar. So okay. And when I go to this is euro dollar chart, and this if we go to weekly we can see it better. Okay, this is actually, for me it is accumulating. So I expect it to go to 128 before it goes down. I'm expecting it to move to 128. So I'm bullish since here. I'm bullish with euro dollar starting from 1.5. Okay. My first target was 109. Then I move it to 115. Still bullish here, and I'm still bullish until 128. And after that, we can see some correction, because at that moment probably the ACB QE will be ending at this moment. End of this year, so we can see the weakening of euro and some strengthening from the dollar. But before that, I'm pretty bullish with euro dollar at the moment.
Okay. Do you have any idea, based on your technical work, that after we get to 127, what type of retracement you'd be looking for in euro?
Well, okay. Well, if we go to 128, but it's okay. It might be a reject. It might be a strong reject.
Yeah.
Because this is the zone we are talking about.
Okay. Because I've interviewed some people that think that once, you know, they're Elliottians, and they're talking about one more thrust up there, and they're looking for a pretty good correction and big bounce in the dollar that could take the euro back down to, say, 116. Are you seeing anything like that? We get one more high, and then we maybe get a 50% correction off this total bull move?
Dale, I don't like making predictions on two legs.
I don't blame you. I predict it's not great to make predictions, but you know, some of us do it. We have biases, but you're just going to go with the flow and see what happens. The only important thing to you right now is that you're looking for a target of 127.5, 128. That's all that matters right now.
This is my actual target. Yes.
All right.
And so for okay, you see here, this was a total mess. The last year was a big mess for Japanese yen.
Yeah.
So I'm, as you see here, if we go to Okay, this tells me that this will go down a little bit longer.
The last chart you looked at, that you showed, go back one chart. It looked if it go back just one. Okay, it looks like if it breaks down under this 1040, that dotted green line, that 92 is possible. That, you know, I was talking about this, and let me see if it makes sense. You see the high
Yes.
from 126 down to 98, that first drop, and then we rallied up to 118. What if we had equality from the last big decline from 125 to 98 from 118 would take it down to about 92, wouldn't it? In a real bearish scenario?
Okay, this is what I think, Dale.
Okay.
This low has been taken. So
Yeah.
there is one close below, there is the second close below, the weekly close. These are the weekly close. So it is not able to climb over this low. So this tells me this is bearish.
Okay.
So this could have been a flat here. This could have been a flat. If this have been closed over into 3 weeks time, then I could call it bullish. But actually, it is closing below this low. So also this selling pressure over the price. So we are also, it also bounced below the median lines, both weekly and in this channel. So I'm pretty bearish with it. Okay, as I said 10 minutes ago, this might be wrong, but this is what I see on this chart.
Okay, you know what? I could tell you're a great teacher. You know why? You're very passionate. Everything that you say comes with a lot of conviction, and
Thank you.
You get right to the point. You don't. You know, a lot of people go, well, you know, this is CNBC analysis. Well, it could go there, but if it's rejected, then it could go down unless buyers come in and push it back up again, unless it fails. Okay, so now why don't you go to your website and show us your website so people know how to get a hold of you, so that if they're, after hearing you live or on the video, that if they want to find a good mentor, they could consider you. Why don't you just show us your website now? We'll make a nice little commercial for you, Steve, okay?
Right now?
Yeah.
Oh.
Yeah, we're about at the half-hour mark. Unless there's something else, we could keep going if you want. It's up to you. But I do, before we say goodbye, want you to show your website, so that besides at Steve Walker 36, when you started trading, which makes you 46 right now, you young punk. You know, I want people to see, you know, you're talking to Father Time here, so I want people to see your website so they know how to get a hold of you.
Okay, let me open the take me off. Let me open it, then I'll connect back. Okay.
Okay.
Okay. Thank you, Dale.
You're very welcome. Yeah, I could tell you coded your own website too.
Dale, take me off. Then I'll connect later. Okay.
Okay. All right. So why don't we leave it at that? Follow Steve at Steve Walker 36 on Twitter, and when you pull up his Twitter, he'll have the link to his website. So why don't you wrap it up with one more market? Okay, let's go with the S&Ps.
Okay.
Tell me what you're seeing here.
Okay, I have already tweeted about that, which is okay. This is the weekly chart. I logged the weekly data. So these are the two trend lines. This is the trend. These two trend lines. I was waiting to bounce over. So this is the weekly data. I logged the data. Now I'll go back to 4-hour chart with the same data. So then you can see the bounces here. Okay, they are exactly the bounces from here, and this is a perfect flat. I was bullish from here with the S&P, and it was a good trade. I already posted about that, tweeted about that. So, okay, there's another thing I would like to show the people here. When I see this formation here, this is important. You should put it in your mind. This formation, this first down, then a flat here, then it fall down. So you will see the same formation. If you go back to pound chart, let's go back to, this is the same formation here.
Wow. So you get an initial break, a little sideways action, and then a collapse.
Yes, exactly. So when I see this formation on S&P 500, I said, I already tweeted about that day, that it will go further down because the same formation here with the pound. So trading, okay.
You have a name for it? What, I mean, you know, I've seen them before. To me, it looks like you just have a big break and then it can't rally to make new highs. You just get some consolidation and then it collapses.
I don't have a name for that. Anyway,
okay.
The only thing
we could call it the Walker.
Okay,
Right.
That's a good one. So when I see this formation here, I said it will go further. But when you go back to weekly chart, these two trend lines. Why I'm counting on these two trend lines? Because the price is bouncing around them here. The price is bouncing around these two trend lines. So my entry point was here.
Okay.
And it was okay. Another thing here.
How about now? New highs?
How about now? Okay. This is, for me, this is still bullish. I'm still bullish with it because this flat has been held. There is no close below here. There's a perfect flat here. And this is a perfect flat here. So there is no close below this. Okay, the main issue is here. Okay, as long as this 2720 holds the 50%, this 2720 holds, then this is still bullish. I won't short it. Anyway, for me, I don't short indices. This doesn't make sense.
Okay.
If I trade indices, if I trade equities, I trade only long, not short. I look for the long trades because when it goes long, it goes long. But short trades, short setups fail very easily. I'm not talking about the Forex market. I'm talking about the stocks market.
Yeah. Okay. All right. Well, that makes, I wish I would have listened to you the last few years. So still bullish S&Ps and
yes,
bearish yen, bullish euro. So weaker dollar.
Yes.
And stronger stocks, which makes sense. You know, the multinationals like a weak dollar. So maybe not until we have a dollar turn do we get another correction in the S&Ps. And
yes.
I want to thank you, Steve, for your passion and spending time with us here, and you know, your retweets of my stuff and everything I see. I'm glad I found you on Twitter.
Oh, same here, Dale. Really, I appreciate meeting with you, and I'm very, how can I say, I'm very happy and appreciate that you are doing this for this trading business, for this trading market, for the traders, experienced and unexperienced. So it's very nice to meet you, and I really happy meeting with you and with your team.
Okay, well, my trading warrior brother, Steve Walker, thank you for your presentation today. I encourage people to at least follow Steve on Twitter and go to his website and check him out, because he's been at it for 10 years, but it sounds more like 20 to me. So thank you again, Steve. Good hunting this week, and keep in touch. We'll do this again down the road, my friend.
Yep, sure. Anytime.
All right. That's it for us, everyone. I'll try and wake up on time tomorrow and give you a few looks before Blake comes on. And most of all, my friends, my trading warrior brothers and sisters, remember, don't just count your pips, count your blessings. See everyone for Turnaround Tuesday tomorrow, or see in the chat room. And don't forget the contest. You know, you could win free subscription. The t-shirts are great. I'm wearing them. The coffee cups are great. I drink out of them. The mouse pad is great. It's the biggest one I've ever had in my career. So get your predictions in, and I'll see everyone tomorrow. Thanks again, Steve.
Oh, thank you, Dale. Thank you.